Thank you for having us, and great to be here. We've seen a significant increase in interest about climate adaptation resilience in the recent past, and that's really for two reasons. Number one, the path towards a 1.5-degree world is more uncertain than it's ever been, and as such, adaptation and resilience is getting more and more important. Number two, just in the last year, we've seen a significant amount of extreme weather scenarios. You've all seen it in the news, and they've very visibly shown the economic losses and the damages that can be caused if we don't take adaptation resilience seriously. So with that, our latest research suggests that there will be more than $1 trillion of spend on climate adaptation and resilience solutions by 2030. More than $1 trillion. And whilst a lot of work has been focused on the demand side of things, so on really understanding, how much will there be in terms of spend in the private and public domain, and where will that money come from, we've been really trying to think hard about the supply side of things. Who are the companies that are sitting there and providing these climate adaptation, resilience solutions and services? And cut it short, this is a significant, a large market, lots of companies there, lots of growth, really attractive space. Yet, we haven't seen much private equity and broader private capital attention and activity in investing into climate adaptation and resilience. And that's really for two reasons. Our work has shown that number one, there's a lot of ambiguity about the space. It's quite complex, it's hard to navigate. That's the common belief in the industry. Number two, there's a misconception around this being still a very early stage industry. And as such, the companies that are sitting behind this are early stage, are small, are not profitable today. There's high technological risk, and here it's not investable for a lot of private equity classes. But what our work has shown is that actually both of these misbeliefs are not true. Number one, yes, it is a complex space, but you can relatively quickly navigate to the dozen of sectors and subsectors that are attractive and actionable today. Number two, if you dive deep into those, you will find many companies that are sizable today, that are highly profitable, that are expecting to see a significant growth and hence tick a lot of boxes for private equity investors across asset classes, venture capital, growth, and infra. Let me share a little bit more. So if we unpack the climate adaptation resilience space, we're really looking at 7 broad sectors and themes, from food resilience to health resilience to biodiversity. And below these are sitting very specific subsectors that you can pin out to understand the opportunities in the space in an actionable and more detailed manner. And we've done so. We've looked at 50 plus subsectors. We've looked at, where's investment activity today, where forward-looking signals like, increase in demand, increase in prices, and you see there's 24 of sectors and subsectors that are already investable today. Let me share a little bit more about the 9 ones that we are most interested and excited about. If we start with the top right, there is climate-resilient construction materials. Things like water-resistant coatings that you can put on buildings to make them more resistant against floods. Massive market already today, 200 billion plus. It's going to grow significantly in the years to come. High EBITDA margins, and more importantly, there's many companies in there that are specialized in what they are doing and that are actionable and really interesting from an investor space. On the bottom left, on the other side, you have climate intelligence, so Gen AI and AI-enabled solutions that help corporates better understand their climate risks and map them out for them. A nascent space, more nascent space today, 5 billion in spend today, but that space gonna grow tenfold just in the next few years. Very attractive from a profitability perspective. And again, there's specialized companies that are really good at what they are doing. They're fitting all the boxes when it comes to investments. So what all these 9 sectors have in common is really 3 things. Number one, there's a sizable market today. Number 2, they're really highly profitable and attractive from a returns perspective. And number 3, they are companies that you can act on as an investor today. There's so much more to talk about, and And I really encourage you to take a look at the report that we are launching today with our partners at Temasek. We have a lunch session just after this where we're going to go in more depth here. So, take the time and take a look at the report. But there's really two things I want you to take away from this. Number one, the market for climate adaptation resilient solutions is already large today, and it's just going to accelerate in the years to come. And number two, investing into those solutions is actionable and really attractive for private equity across asset classes today. With that, let me turn to my panelists and real, very seasoned practitioners in the space. Linda, Gina, maybe we start with you. You and the Emerald team have started looking into climate adaptation resilience, 25 years ago. What has attracted you to do so back then, and how are you thinking about the space today?
Yeah, sure. Back in the 90s, I was running strategy and M&A at a large Swiss industrial technology company, and we were doing scenarios, kind of trying to figure out how to position the corporation. And we felt that climate change is going to have a huge impact on the industrial sectors, which will cause challenges, but also a lot of opportunities for technology solutions. So that was back in the 90s. At the end of the 90s, then I left and decided to exactly launch a venture capital fund in first time team, first time fund in a sector that didn't exist, but really to back companies that are coming up with technology solutions. So, back then the ecosystem didn't exist. The technologies were starting to exist, entrepreneurs maybe, and certainly there weren't very many venture capital funds. So a lot has changed in the past 25 years.
And that's really an exciting story to talk about. We've just seen a number of sectors that are really interesting. Two in there were water efficiency and agriculture resilience. And those are sectors that you've focused a lot on, and you've made a number of investments in the space. Can you share a little bit more about that?
Sure, yeah. And I mean, obviously, energy, everybody knows energy, but I think there are other sectors, as you mentioned, which are really important. So on the water side, either you've got way too much or you've got too little. I'm talking about kind of too little water. I think one of the really interesting technology areas that we invest in is on leak detection, right? So how do you get the utilities to manage their networks better to ensure that their water loss isn't so high? You've got certain countries, let's say the UK, where you've got a very strong regulator with Ofwat, who's forcing the utilities to measure, report, and then they get penalized if their non-revenue water exceeds a certain amount. In other countries like Australia, you've got a lot of privately held utilities that have an economic incentive to ensure that their water loss is reduced, right? I think this market demand is super important for us to invest in. So we've invested in companies like Fido that you had up there, others like Agonova, Takatu. On the agriculture side, you can imagine climate change is having a huge impact on how traditional farms are managed, and we're looking at a lot of digital technology. So one of the companies we invested in, X Farm, which is actually helping to digitize the farm. You've got weather prediction, you've got precision irrigation, different types of pests and disease that the farmers are having to deal with that they didn't have to deal with in the past. So all of this is helping to kind of create a smart farm to deal with climate change.
And it's really great to hear about these investments and them coming through for you. And as we just talked about, there's so much more in that space and so much more to do on the private equity side here. Let's shift gears a little bit and talk about public markets. Linda, you and the MSCI team have done quite a bit of research to look into climate A&R in the context of public markets. Can you share a little bit more?
Sure. So MSCI works with many of the world's largest investors, and public equities, to be honest, is not really top of mind when investors think about adaptation and resilience. They typically still think about that as kind of a government and philanthropic domain. But I think that mindset is really actually changing quite quickly. And part of it is that there's been a lot of scenario modeling that shows investors that many of their portfolio companies are facing escalating physical climate risks. And as these companies have to protect their assets, the questions for investors are, well, who's actually going to be selling these product solutions? And our listed companies, which still make up the bulk of their investments, are they missing out on a growth opportunity? So we tried to answer some of that question at the Institute at MSCI. We did a piece of work with the Global Adaptation Resilience Investment Working Group, or GARI, and we took the broadest set of publicly listed companies, the MSCI broadest index of 9,000 companies, and we identified, over 800 companies that actually have some revenue segments that have exposure to resilience products. Now, interestingly, about 40% of those companies are domiciled here in Asia. And Asia, of course, is also where we see that investors such as Temasek and many of the investors that are members of AIGCC are actually also more forward thinking in terms of understanding that if you want to be identifying resilience opportunities, you actually need to be able to understand the layering of the hazard with a location with the potential product solution, right? So just to illustrate, we recently looked into heat stress for Asia. We know that scientists tell us that Asia is going to be particularly vulnerable in its urban areas, and our own climate modeling does actually show that for Asian companies, like their valuations are going to be much more impacted than companies elsewhere. And so if you start to look at some of the companies, we provided some case examples. You start to see that there are companies like hybrid seed companies in India or Korea, energy efficient glass makers, or diversified chemical companies that are actually have uh, heat reflective paints, for example, serving the Indian market. Now, none of these are called out as specific segments that you can say, hey, this is a resilient set of products and revenues, and you have to go and find them because they have to be serving those markets where the confluence of the hazard and the location and the solutions actually fit and can actually then be a growth driver.
You just mentioned something really interesting. I want to dive a little bit deeper around the fact that there's so many great solutions out there, but oftentimes they're not really labeled as climate A&R, and it's really hard to find them particularly in the context of public companies. Can you share a bit more on that one?
Yeah, I mean, definitely. No one actually is actually, flying the flag and saying we're a resilience company. And really the challenge is that in this space, to identify resilience opportunities, it really requires context, right? So first of all, you don't have any standardized business segments that let you screen an entire portfolio of companies for those resilience solutions. The second thing is there are a lot of multi-use products, right? So just think of something very mundane like pipes that you're going to need to build stormwater drainage or irrigation, but can also be used for oil and gas. And then thirdly, it's actually matching that product, as I said, with location and hazard. So let's say you are a construction or engineering company that doesn't actually qualify you automatically as a resilience company. But one of the cases that we were featuring or highlighting is, if you are a construction company in Japan, for example, that is then testing your infrastructure design, stress testing it against tsunami in one location, and sea level rise in another location. That's kind of where we're starting to see those types of opportunities. So the thing about this space is that it's not going to be where you're going to neatly get like a green list or a brown list the way we are typically trying to identify mitigation opportunities or opportunities in other sustainable investment themes. Instead, what you are going to need is AI. To be honest, we're very fortunate that AI in particular, I think, is very well suited for connecting the dots, between the hazard and the location and the product solution. And that's what our team spent a lot of time doing, is to actually refine the large language model to find those opportunities. And we're starting to see asset owners and asset managers actually use those same tools to find this hidden opportunity. Because even though we call this an unavoidable opportunity, it's still very much a hidden opportunity because it's so hard to identify.
So lots of activity there right in the public market side. You have to look into this a little bit because it's not tagged the right way, but there's increasing activity. That's what I'm taking away from this. So do you eventually see the public market and bigger corporates to buy the companies that China's invested in?
Yeah, no, that's really interesting because when Gino's talking about the companies, I think a lot of their exit strategies would be strategic investments for some of the larger public companies, and we're starting to kind of see that as companies want to build very quickly their capabilities into these growth areas, you're going to see more of these acquisitions. But actually, to the larger point of public markets and private markets, I think when we look across MSCI's private capital database of over 13,000 private capital funds, and when we just look at the climate related, climate themed funds, there are 50% of them right now in terms of net asset value are in infrastructure. So it is water infrastructure, grid upgrades, and so forth, and 30% of them are in venture. And actually more than half of the venture is in early stage area. So what's actually kind of underrepresented is growth equity and buyout, but growth equity. And so I think that there is definitely room for growth equity to really kind of step into this in order to actually scale the emerging technology. So I think congratulations on the report, because I think it's extremely timely. And I do think that public companies will either in parallel or sequentially play that same role of actually investing into these emerging technologies in order to actually really scale them, because there's just tremendous need and tremendous opportunity.
So indeed, a gap that private equity can fill here, and there's the supply from the venture side, there's eventually the demand from the corporate side, so there's a real gap that private equity can play here. That's really exciting, though. And maybe close off with you, Gina. We've seen a lot of excitement about climate adaptation resilience in the recent past. We talked about this. What makes you excited about this space, just looking out 2-3 years ahead?
Yeah, this is really kind of a virtuous circle, right? So the money will come when the people see returns. Entrepreneurs will be drawn to the sector when they see successful companies. Research will, continue to be financed when people see a market opportunity. And I think that's really the biggest difference that we've seen. When we started 25 years ago, there was very little market demand, and we were perhaps, too optimistic to think that the world is going to adopt technologies just because we collectively need them. It's driven by economics in the end of the day, right? So as you see technologies becoming more economically viable and not just, at par with, but really significantly reducing the cost to some of these industrial customers, then we really see the market demand happening. And in cases where that's not existing, you see customer demand kind of driving companies to change regulation and policy as well. So we do see a real kind of optimistic outlook now that we see the market demand that's going to really help these startups to accelerate their commercialization.
And that's a really great way to end the session, right? So we started with saying, in the recent past, there's been a significant increase in emphasis and excitement around, really growing and accelerating solutions and services around climate adaptation resilience. And Ginny, you've just talked about that, the outlook is just accelerating, and we will see more excitement of this in the recent future. So thanks again, Gina and Linda, for joining us here today. Thank you all for joining us as well.
Thank you.